Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks decline for a second day as a record-breaking rally loses steam. Traders weighing mixed U.S. economic data, rapid geopolitical shifts, and a flurry of Trump's social media posts. The U.S. plans to control future sales of Venezuelan oil indefinitely, with President Trump saying the country will use the revenue only to buy U.S.-made goods. Plus, Iran's president has ordered security forces not to target peaceful protesters. We speak to Aniseh Bassiri Tabrizi, senior analyst at Control Risk, on what the escalating unrest means for the Iranian regime. It's just gone 9 a.m. across the Emirates. I'm Jun Bei Liu in Dubai. Well, we're seeing markets take a bit of a breather this morning. The handover from Asia Pacific quite negative. As you can see, the MXAP down about 0.5%. So a second day of declines coming through from Asia after the very strong start to the year, very strong out of the gates, the first couple of days of trading. Not so much the case the last 24 hours or so, with some of those tech names struggling, the big mega tech names in China and beyond struggling versus a rotation that we're seeing going into chips. I'm going to talk about that in a moment. But that is the picture from Asia. S&P also sliding a little bit this morning, down about 0.1% as well, this after dipping yesterday. And I should say that there are a couple of sectors that came under scrutiny yesterday. The first is the housing-related companies. This after President Trump said that he would move to ban institutional investors from buying single-family homes. On the back of that, you saw home builders, those shares drop. Blackstone also dropping around 5% yesterday in trade, too, on back of those remarks, with the U.S. president seemingly looking to focus on housing affordability. The other sector also that came under selling pressure yesterday, defense stocks, with Trump also saying he won't allow defense companies to issue dividends or buy back their own stock unless they invest more in production and research. It felt like it came a bit out of nowhere for many of these defense firms, especially given how hawkish the Trump administration is. So both defense and housing struggled yesterday in trade in the U.S. afternoon. Beyond that, taking a look at oil, of course, we've been monitoring all of the developments in Venezuela very closely. Today, we're up 0.5%, the latest being that the U.S. Energy Ministry saying that they want to take full control of Venezuelan oil in the future. So, again, it gives us a little bit more color about how the U.S. administration is thinking about what they want to do with Venezuelan oil after yesterday's announcement that they were looking to receive about 50 million barrels of oil from Venezuela. And then 10-year yields sitting at 4.14. We continue to slide lower. And I will just say, and I thought this was quite interesting, global bond sales, and this is a story that's up on the terminal this morning, had their busiest ever start to the year as borrowers of every stripe seize on investors' insatiable appetite for risk. So essentially, we've seen a truckload of issuance, both in corporate and in sovereign space in the first couple of days of this year. It hasn't impacted 10-year USDs so much. Flipping over, and I just want to touch on something that I briefly glossed over, and this is a theme that has been flagged by my colleague Anthony Stevens. But essentially what's happening right now, the last couple of days, really interesting, is that we're seeing a lot of interest and demand in chips and in memory chips. Remember, Jensen Huang at CES talked about this being the year where you're going to see a lot of demand for memory chips. And so those companies are doing really well, perhaps at the expense of some of the more better-known tech giants, the likes of Alibaba, Tencent, which have really struggled in the last couple of months as they've come under increasing government scrutiny. So that is one of the themes that's being played out in Asia, and I thought I would flag it today. Okay, let's speak more about Asia, though, more broadly. Winnie Su is in our Hong Kong studio. Winnie, break it down for us, please.
Yeah, morning, Joanna. Like you mentioned, that Asian stocks is really losing a bit of steam today, especially after how the gauge was in that overbought territory yesterday. And you can see here leading losses on are the shares in Hong Kong and also in Japan, with both benchmarks down over 8%. And that is really still being driven by that escalation between China and Japan. While on the other hand, interestingly, we're seeing that bucking the trend is the Korean benchmark here, Kospi, reversing earlier losses and now up more than 1%. And that's supported by the quarterly earnings from Samsung that was better than expected and actually tripled to another record high for its profits. And that is also showing that they were able to hike these prices for their memory chips and that the strong demand of these chips remain a key driver for the company. Now you flip the board and take a look at how this ongoing tension between China and Japan are affecting different sectors. numbers here, you can see that Japanese related stocks are actually falling after China launched this anti-dumping probe into Japanese chip-making materials, and hence you're seeing that Shin-Etsu Chemical and also Razinek here down more than 3%. On the other hand, that's really helping these related names in China as they are expected to gain more market shares. Back to you, Jomana.
Yep, geopolitics also in focus there as well between China and Japan. Winnie Su in Hong Kong, thank you for flagging it to us. While investors are staying on the sidelines ahead of Friday's U.S. economic data, which will offer clues on the path of interest rates. For more market insights, Jun Bei Liu, founder of 10Cap, joins us from Sydney. Jun Bei, it's really good to have you with us on the show. Happy New Year. I'm going to start with the question I've been putting to pretty much all of our guests for this first trading week of the year. Are we likely to see a return of these types of equities performance in 2026 as we got in 2025? Global MSCI index up more than 20% last year.
Look, absolutely. Happy New Year. Thank you for having me. Look, this is a question every investor is asking, and you're exactly right. We are likely to see, sort of average return, which is still double digit for, for the equity market. But I do think, though, the return that we have seen from the likes of the markets like Europe and others is going to struggle somewhat. We do think the U.S. market is going to regain the leadership in 2026 as the economy sort of move past the uncertainties of tariff and others, and then as the tech companies are sort of moving into more broader based sectors that now likely to benefit from the AI investment. So yeah, we think 2026 is going to be more or less an average year, but you still looking at a high single digit to double digit return.
Okay, you've written in your notes that the market is transitioning from a liquidity-fueled rally to an earnings-led cycle where fundamentals matter again. I mean, one of the things that perhaps stood out last year was the earnings, at least for Magnificent Seven and for those mega-cap tech companies, were pretty robust and was one of the reasons that they outperformed so well. Why do you see that perhaps changing or being more prevalent amongst other stocks in the index this year?
Sure. We do think, though, last year, because of the rate cut cycle there in the US and around the world, so we are seeing quite incredible amount of liquidity supporting the valuation. So even though, yes, we do see the tech company continue to do very well because their earnings continue to grow well. However, towards the latter part of last year, you are seeing some of the earnings are not so meeting the expectations. In the equity market, it's a relative game. You've got to do better than what people expect. So the tech company, we are seeing now the expectation is so high, it's harder to get there. But last year, what really made a lot of money is cheaper companies. The valuation really drove a lot of returns in the markets where things are cheap. So we do think this year, the valuation game is done. It's really about the companies to have the earnings growth that will pull through and that will do better.
Yeah. What do you make of this new theme that I was just speaking about at the top of the show, and the fact that there's been so much excitement around chips and memory chips going into 2026? Is that likely to have legs, do you think?
Look, I do think so. It certainly seems like there's also discussion about the shortage. Again, now we started moving into what sector likely to benefit. I do think that part of the reason is because the AI-related theme has been going on for the last couple of years, and the valuations become pretty stretched in those businesses. It's just investors now looking into the next leg of beneficiary from those investments, and the chip is one component. But I think 2026, you are going to see some of the sectors become more bigger beneficiary, not so much in the tech. It's actually across the rest of the equity market. Financial, for example, whether it's banks or healthcare and other space, they are likely to be actually big beneficiaries for multi-years to come. So I think the focus will be really now moving into who's going to benefit or who's going to miss out in this AI game.
Yeah, and let me go back to something you said right at the beginning of our conversation, and that you expect U.S. equity markets to outperform this year. Why is that the case, Jun Bei?
Yeah, look, there is a number of things. Clearly, we are seeing now a bit more broadening out in terms of the performance, and the leadership in performance is now changing. I do think that in 2026, one is that we are seeing the beneficiaries that's coming through from the AI, and also some of the potential policy changes. So, financial sector, the banks, for example, in the US, we are seeing an incredibly strong year for them. With some of the promised capital relaxation and the like, that's going to drive that sector, and that sector is going to deploy a lot of those capitals into the equity market. So the market activity will be very strong, and I think that will do very well. And the next onwards is the cyclical sectors, because with all these rate cuts, they still got one more to be priced in this year. It is going to benefit the economy, despite there might be the tariff is still being absorbed. So I do think that the earnings plus some of the policy change is going to drive big part of the share market. And of course, the tech giants, they continue to invest. That should continue to see them reasonably supported.
Yeah. Founder of 10Cap, Jun Bei Liu, thank you so much for joining Horizons today. We appreciate it. And Fed Governor Stephen Myron joins Bloomberg surveillance later today as investors await President Trump's pick to replace Jay Powell. That interview coming up at the Times on your screen. Now for a look at some of the other stories we're following. U.S. defense stocks rose after the bell after President Trump said he would request a more than 50% increase in next year's military budget to $1.5 trillion. Shares had tumbled earlier as Trump called for military contractors to cut dividends and buybacks. The White House has since posted an executive order to that effect. Shares of homebuilders tumbled in the U.S. after President Trump announced a ban on institutional investors from buying single-family homes. Blackstone, a major investor, pared some losses before closing 5% lower. The announcement is a bid to address housing affordability ahead of this year's midterm elections. Protests have erupted in Minneapolis after an immigration and customs enforcement officer, an ICE officer, shot and killed a woman in a car during a confrontation. President Trump says the officer appeared to be acting in self-defense, alleging the victim acted in a disorderly and obstructive way. The Minneapolis mayor has called on ICE to leave the city.
What they are doing is not to provide safety in America. What they are doing is causing chaos and distrust. They're ripping families apart. They're sowing chaos on our streets. And in this case, quite literally killing people.
Coming up, Washington says it will control Venezuela's oil exports indefinitely. We'll bring you the latest on this, along with President Trump's vision for Greenland next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Trump administration says it plans to control future sales of Venezuelan oil and hold the proceeds in U.S. accounts. The statement from Energy Secretary Chris Wright is the clearest statement yet on Washington's strategy to control Venezuela's most valuable resource. Let's go across to our news desk managing editor Jill Deesis in Hong Kong. So pretty transparent comments coming through from the Energy Secretary yesterday, Chris Wright. And I think it really tells us in a lot more detail about how the U.S. is really thinking about their plan for Venezuela. Venezuelan oil raises questions about feasibility and legality. What is the upshot from all of this, Jill?
Yes, that's right, Jumana. And I think really the thing to keep in mind here is that, despite a lot of these comments coming from Donald Trump himself, the Trump administration, there's still a lot of unanswered questions about how exactly all of this works logistically. Because remember, it's not like, the United States has boots on the ground in Venezuela and has completely overtaken the government. They've got an acting president, there who, was a Maduro loyalist who ultimately is sort of, keeping up some elements of that administration administration. So it's not like there was wholesale regime change in Venezuela. Obviously, Rodriguez, the acting president, has vowed to cooperate with the United States, but you've got some pretty big claims coming here out of the United States. I do think the other thing to keep in mind is also that the Trump administration is really pushing for American oil companies to either expand their footprint or get back into Venezuela. So there is that element of it as well. As we understand it, Chevron, which is the only U.S. oil supermajor that actually operates in Venezuela right now, you're seeing on your screen here, they're actually looking at expanding operations potentially. You've got Citgo that's looking to potentially resume purchases in Venezuela. So a lot of action here, a lot of talk about how exactly you ultimately jumpstart Venezuela's oil industry again. Remember, while they have it's the largest proven oil reserves in the entire world, the actual infrastructure for oil production is much diminished from where it was historically. So a lot of work to be done to actually get to that stage again, probably a lot of time and ultimately potentially tens of billions of dollars.
Yeah, and story up on the terminal this morning saying that some of those oil companies are actually asking for guarantees out of the U.S. government should they actually choose to go down the route of investing in Venezuela. But let's switch tack, because there's also been a lot of commentary around Greenland the last 24 hours as well. And specifically, President Trump has said that they've actively discussed, this is a quote, the actual purchase of Greenland, and saying that he'd prefer diplomacy but would not rule out military action. Bring us up to speed on what we know about what the U.S. is planning on doing with Greenland and why it is of such strategic importance to the U.S.
Yes, right. Well, I think, sort of in terms of its global positioning in the world, this island that also is, pretty much within spitting distances of places like Russia and such. That's a big reason why Trump has really positioned this as, an island of a lot of strategic importance. I think how exactly the United States would actually come to owning Greenland, obviously, when you've got, Denmark, which a NATO ally, which owns the territory or controls the territory. They're saying, that Greenland is part of Denmark. This is really, I think, all, a huge question here, whether the United States and Trump himself would actually go forward with something like this. I think, a couple of key points to keep in mind here, too, is that, when Trump first returned to office at the beginning of last year, talking about Greenland was such a big priority to the point of even sending, J.D. Vance over to Greenland. But, it kind of fell off the radar for several months there. Now the fact that you've got Donald Trump bringing this back up again, I think, raises a lot of questions about what exactly this would ultimately look like. It does appear that the United States is considering a number of business deals to sort of expand its footprint in Greenland. Maybe that's where it ultimately gives them some kind of a sway there. But I think the big thing here, though, is that again, Greenland is a territory that's controlled by a NATO ally. So there's a huge number of unanswered questions here, and ultimately a lot of concerns over what exactly the Trump administration's aims are here.
Jill Desis, thank you so much for breaking it down for us. Jill Desis, our news desk managing editor. Well, coming up, Bloomberg has learned that Russia targeted South African gamers to recruit fighters for the war in Ukraine. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. United Nations experts say Rwanda-backed M23 rebels are creating an autonomous region in Eastern Democratic Republic of Congo. According to the UN report, the group is seizing strategic mines and setting up a parallel government in North and South Kivu provinces with support from Rwanda's military. The findings come despite ongoing U.S. and Qatar-backed peace efforts. Zambia has decided not to extend its IMF credit facility, which is set to expire this month. The government had been seeking a one-year extension that could have unlocked about $145 million in additional funding. The IMF says its board will review Zambia's program for the final time later this month. Ghana's annual inflation rate slowed further in December, providing room for the central bank to cut borrowing costs further. Consumer prices slowed to its lowest level since 2021, helped by easing food and non-food costs and a stronger cedi. With inflation now within the target range, markets are increasingly betting that the Bank of Ghana will deliver a fourth straight rate cut when it meets later this month. Bloomberg News has learned that Russia targeted South African video gamers as part of a recruitment drive for its war in Ukraine. The men involved regularly used Discord while playing the game Arma 3 before signing military contracts. Anthony Squazin, Bloomberg's senior reporter for Africa, joins me now. Quite a fascinating story. Anthony, how were these South Africans contacted in the first place? What role did the gaming app play?
Yes, well, they play the game Arma 3, but they use the messaging app Discord to speak to each other. So it's played interactively with people from around the world. They were approached by a Russian player with the hashtag Discord, with the Discord hash dash. And basically, he talked them into signing up to the Russian army. They went to the consulate in Cape Town. Then they flew via Dubai, went to Russia, and signed up with the army. And then one of them was killed a few weeks later on the front line in Ukraine.
Yeah. What do we know about the scale of this recruitment? How widespread was it?
I don't think it's particularly widespread, but I think the method of recruitment is unusual. So we haven't come across this before, and we haven't seen it elsewhere either. But the issue of Russian recruitment of Africans for its army is becoming a bigger and bigger issue. In the last few months, we've seen the daughter of a former President, Jacob Zuma, tied to the recruitment of about 20 young South Africans and Botswanans, telling them they would be undergoing bodyguard training in Russia, and then they ended up being sent to the front line. In Kenya, the foreign minister said more than 200 people have ended up fighting for Russia after being told they'd be working as drivers or cooks. And we've seen reports from the French think tank IFRI that Russia has been actively recruiting from the Cameroonian army as well.
And given that fighting for foreign military is actually illegal in South Africa, what has been the response out of the South African authorities?
Well, South African authorities have said very little. They have said nothing about this particular case involving Discord and Arma 3. But they did respond earlier when the initial reports were about the former president's daughter being tied to these, and said that they would try and get the South Africans back to South Africa as fast as possible and would sort out the consequences later. And also subsequent to that, there was an instance where they arrested 4 people trying to get into a plane to Dubai at South Africa's main airport in Johannesburg, along with a female presenter from state radio who they said had been trying to recruit them for the Russian military. So those people were in court a couple of months ago, and they'll be back in court to be on trial on February the 10th. So they are taking action, but their response has been, we don't want to talk about it, it's very sensitive, and we're also involved in state-to-state negotiation to try and get our people back and safe.
Anthony Squazin, Bloomberg's senior reporter for Africa, thank you for bringing us that story. Well, coming up, there seems to be no de-escalation in sight as unrest in Iran continues to drag on. We speak to Aniseh Bassiri Tabrizi, senior analyst at Control Risk, on what's at stake. That's coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. The U.S. plans to control future sales of Venezuelan oil indefinitely, with President Trump saying the country will use revenue only to buy U.S.-made goods. We look closer at the market reaction in Saudi Arabia as the kingdom opens up its stocks to all foreign investors. Plus, Iran's president has ordered security forces not to target peaceful protesters. We speak to Aniseh Bassiri Tabrizi, senior analyst at Control Risk, on what the escalating unrest means for the Iranian regime. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. The handover from Asia Pacific today, kind of weak, so down 0.5% for MXAP index. And this is the second day in the row that we are seeing declines after what has been quite a strong start to the year. And that's seeping into S&P futures this morning. We're down 0.2%. We also saw a bit of a down day yesterday for the S&P, pulling back just about 0.3%. Nothing too dramatic. But ultimately, there are a couple of sectors that we were focused on. Number one is housing-related companies, home-building stocks. This after President Trump said that he would move to ban institutional investors from buying single-family homes. So the likes of Blackstone dropping 5% on that. And then later on, he also was talking about defense companies and saying he wouldn't allow defense companies to issue dividends or buy back their own stock until they invest more in production and research. Came as a bit of a surprise to the defense sector. And what you did see was names in that space also get sold as well. So a couple of under the surface movement to talk about with the S&P. Switching over to oil, and you can see that Brent today is trading north of $60 once again. 60.3 is where we're at. We're up 0.5%, keeping close eye on everything the Trump administration is saying vis-a-vis their goals for Venezuelan oil. We were just talking about that on the goal, and that they plan to hold on to those oil exports indefinitely and use the proceeds for U.S. goods. So lots of questions about feasibility and also legality of all of this. But this is the reaction in oil this morning. And then 10-year yields sitting at 4.14 now. We've rallied a couple of basis points the last couple of days. But I did want to flag, and this is what I was talking about earlier, global bond sales have had their busiest ever start to the year. A really interesting stat put out by Bloomberg. Corporations and governments in the U.S., Europe, and Asia have borrowed nearly $260 billion already so far this year. It has been a really bumper start for bond issuance in the first couple of days of this year. But 10-year yields are actually lower. And then switching over, one theme that caught my eye the last couple of days, and this was flagged to us by our colleague Anthony Stevens, is the fact that there's some rotation going on in a lot of these Asian stocks. And namely what you're seeing is a lot of love pouring into chips, to memory makers, as opposed to some of the larger tech, big mega cap names that you would be more familiar with, the likes of Alibaba and Tencent, for example, struggling versus the likes of some chip makers actually doing well over the last couple of weeks. So a lot of momentum behind that trade. And you could say that it is only just getting going, especially after Jensen Huang's comments at CES saying that this is going to be the year we're going to see a lot of demand for those memory chips. Okay, let's also check in on how markets in Asia are faring. Winnie Su is in our Hong Kong studio. Winnie.
Yeah, Joanna, like you mentioned, Asian stocks taking a bit of a breather today, especially after how the gauge entered that overbought territory yesterday. Now, you can see that leading losses today are stocks in Hong Kong and Japan, both down more than 1%. And that's still being driven by that escalating tensions between China and Japan. However, really bucking the trend here are the Korean stocks, with the Kospi reversing earlier losses and now up slightly less than 1%. And that's being supported by the quarterly earnings from Samsung, which was better than expected, and it saw profits tripled to a record high. Like you mentioned just now, it is that very strong demand for memory and also the fact that they were able to hike their memory chip prices. Now flip the board and take a look at how this escalating tensions between China and Japan are affecting our stocks here, with China now launching that anti-dumping probe into Japan's chip-making materials. And hence you can see that those makers in Japan are actually losing here, with Shinetsu Chemical and also Resonex both down more than 3%. The statement actually said that these companies with their materials are hurting the interest of domestic makers. And hence, you're seeing that the Chinese makers here are gaining on those probes, really reversing what we've been seeing in the past few sessions. Back to you, Jomana.
Winnie, thank you so much. Winnie Su in Hong Kong. Well, Iran's president has ordered security forces not to target peaceful protesters in a bid to defuse violent unrest that activists say has left at least 36 people dead. Masoud Pezeshkian's comments come as security forces have forcibly broken up demonstrations and raided hospitals. The protests, which began over the weakening currency and the associated rise in prices, have prompted President Donald Trump to threaten U.S. intervention if protesters die during demonstrations. Joining me now is Aniseh Bassiri Tabrizi, senior analyst at Control Risk. A lot to discuss here, especially you could also say with the latest developments in Venezuela, perhaps the knock-on effects potentially for the Iranian regime. But first, let me just ask you, how serious a threat are these demonstrations to the regime right now? Because we're not getting the numbers we saw, say, back at the Green Revolution, end of 2009, or the Women, Life, Freedom movement in 2022, they're not, in terms of scale, as large as those demonstrations were.
Good morning, Jumana, and thanks for having me. Well, you're right. We don't have the scale of the demonstration that you mentioned, but at the same time, these are the most significant demonstrations since 2022. We have to remember that those demonstrations lasted several months, so we could argue we are in the early days, and the main driver of those demonstrations was the killing of a woman for the lack of wearing of the hijab by the morality police. So I would argue that this driver, the economic driver, which is at the core of the protesters' sentiment, is broader. It's a larger scale. So I think there is a risk or an opportunity for these protests to actually become bigger than what we have seen. I think Iran is also not in the same spot in which it was in 2022 for several reasons. Obviously, geopolitically speaking, we have seen the war with Israel and the United States in June, the downgrading of its capabilities and the proxies over the past couple of years at the hand of Israel. We have seen also the weakening of its economic situation, which was already struggling. And I think also it's important to see where the military staff is also in terms of capability, given the attacks that were conducted by Israel in June. So I think Iran is not there. That doesn't mean that I think a revolution is happening or that these demonstrations at the moment pose a risk to the stability of the regime. But at the same time, I think a lot has changed over the past 3 years and a half. And the situation is very volatile, including what you mentioned, the threat posed by President Trump, which is a new factor.
Yeah. How do you think the events in Venezuela are shaping how the Iranian regime is viewing its own security and the fact that the U.S., at least in the case of Venezuela, very blatantly went for the ouster of Maduro and are being very explicit about what their objectives are in that country? Is there a knock-on effect? Is there a read across to perhaps the U.S. and forcible regime change in Iran as well?
I think Iranians are looking at that as a risk. There was always, a risk of restoration of the conflict since June. There is a ceasefire, but that has been, volatile as well because the reasons for the war in the first place have not been solved, and the concerns by the Israeli side and the response from the Iranian side are still there. But I think the threat posed by President Trump makes things much more dangerous from an Iranian perspective. I think, the Iranian cadre are probably seeing President Trump's threshold for intervention as much lower than any other president in the U.S., and therefore are probably also preparing for that eventuality. For the direct intervention, including a coup from the U.S. in Iran. We have seen the rhetoric from the Iranian side being new also because of Venezuela. We have seen discussion about a potential preemptive response, for instance, which was not in the cards over the past 6 months. So I think there is a concern from the Iranian side that the events in Venezuela, coupled with the perception of vulnerability that this demonstration might generate in Israel and the United States regarding the fragility of the Islamic Republic, might lead to the decision to conduct a series of strikes, or even worse, basically look into the regime change option.
What likelihood do you see for the re-emergence of another war between Israel and Iran this year in 2026?
I think it is very likely that we are going to see another escalation. As I mentioned, the underlying conditions have not been addressed by either side. There is concern from the Israeli side that Iran is rebuilding its ballistic missile facilities and all those that have been destroyed during the war. And I think there is definitely also Iranian preparation for a response, no matter the scale of the attack that is conducted by Israel / the United States, depending on the level of intervention. Should they want to target the ballistic missile facilities or to try to preempt an Iranian rebuilding of its capability? So that is there. Then obviously there is also the nuclear question, which on the enrichment side is paused. But we know that the nuclear ambition from the Iranian side have not been addressed. We don't have any progress on the resumption of negotiations between the US and Iran. And therefore, basically the goal of the Iranian side to maintain its nuclear capability, however downgraded they are at the moment, it's still there. The know-how is still there. So I think the risk is very high. And I would say that the higher is the perception that the Islamic Republic is on the verge of a collapse, the more likely it is that the Israeli and the US side will see that as potentially an opportunity to resume those strikes.
Aniseh, thank you so much for joining us. Aniseh Bassiri Tabrizi, Senior Analyst at Control Risk. Now for a look at some of the other stories we're following today. Iran's semi-official Tasnim news agency is reporting Iran's foreign minister is set to arrive in Lebanon later today. Abbas Araghchi says Iran is seeking to expand ties with Lebanon, while also adding there is what he described as motivations on the other side to expand relations. The trip comes as Beirut faces increasing pressure from the U.S. to implement a ceasefire that requires the disarming of the Iran-backed Hezbollah. Fighting has escalated in Syria's northern city of Aleppo after tens of thousands of residents fled to predominantly ethnic Kurdish neighborhoods when the military ordered civilians to evacuate the area. The Associated Press is reporting clashes and shelling have killed at least 7 people in areas controlled by the Kurdish-led and U.S.-backed Syrian Democratic Forces. Aleppo's Directorate of Social Affairs and Labor says more than 46,000 people have been displaced so far. And coming up, Saudi Arabian equities rose after the kingdom opened up its stock to all foreign investors. We'll bring more on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Arabia has opened its $2.5 trillion stock market to all foreign investors. The Tadawul all-share index jumped as much as 2.5% on Wednesday as investors welcomed the kingdom's efforts to boost flows into the Middle East's largest market. By the end of the session, we were up 1.6%. For more, I'm joined by Farah Al-Bahrawi, Bloomberg's team leader for EMEA equity markets. So maybe we can just go over, recap why Saudi regulators have been pushing these measures through.
Good morning, Jumana. So we have been expecting this to some extent, at least market participants that we've been speaking to. They say that this is a step in the right direction to really what the market's actually waiting for, which is the removal of foreign ownership limits in Saudi Arabia. That would really be the game changer that would impact its weight on MSCI. So they say that it's harder to quantify the impact of the removal of QFIs, but what really was important here is that the market needed some kind of catalyst. Last year, the Tadawul fell 13%. Emerging markets were up about 30%. So that gap was the worst in terms of performance for the Saudi versus its peers since 2009. So a really big difference there. Investors were not very excited by Saudi Arabia.
And how much is this actually going to move the needle, Farah? I mean, weren't Wall Street investors already involved in the Saudi Stock Exchange?
Absolutely. So that's what we're kind of getting again from the sense from the market is that it's hard to really quantify how this would impact the market. It's not a negative step by any means, but it's not the key story. this will open doors to different kinds of investors, both retail and institutional, smaller players. But the question is, how much appetite are we going to get, especially with the Saudi economic picture looking a little bit mixed right now, with oil prices still being quite subdued?
Yeah, and obviously the goal is to help revitalize capital markets, IPOs as well. What is the outlook for the Tadawul for this year?
It's not been great. Again, with the oil prices where they are, investors have been quite wary of earnings. They've been wary of the economic backdrop. IPOs, the pipeline is still there according to the regulator. But, if we do get those new investors, maybe, again, we could get some more interest, not just from the regular participants in the market, but really with the outlook for other emerging markets that also benefit from a weaker dollar where Saudi Arabia does not. Some investors may want to choose those over Saudi Arabia as of now, at least.
Yeah. Farah, thank you so much for the report. Farah al-Bahrawi, Bloomberg's team leader for EMEA equity markets. Well, Bloomberg has learned Revolut is in talks to acquire Turkish digital bank FUPS to start offering its services in the country. No final decisions have been made, and the acquisition will be subject to approval by the Turkish banking regulator. Analysts say Revolut's potential entry into Turkey would intensify competition in a market where incumbents are already digitally advanced but still depend on branch networks. And coming up, Samsung's profit triples as AI demand sends memory chip prices soaring. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Warner Brothers Discovery has rejected the latest takeover offer from Paramount Skydance, encouraging shareholders to stick with the Netflix deal. Warner's board says it doubts Paramount can close the deal, which carries significant risks. Billionaire Larry Ellison has said he would personally guarantee $40 billion in equity financing for Paramount's hostile bid. AI startup Anthropic is said to be raising a new round of funding that would value the company at $350 billion. Sources say the Claude chatbot developer seeks to raise $10 billion in the round. We're told Singapore's sovereign wealth fund and Coatue Management plan to lead the financing, with Microsoft and NVIDIA also expected to participate. JP Morgan has reached a deal to take over the Apple credit card from Goldman Sachs. In a joint release, Apple and JP Morgan say the transition should happen over the next 2 years. And in a separate announcement, Goldman said the deal will give a boost to its fourth quarter earnings. Samsung says its fourth quarter profit more than tripled to a record high as surging global demand for AI servers drives up memory chip prices. For more, we're now joined by Bloomberg's Mayumi Nagishi. This is a theme that we've been following at least very closely on today's show. How much of the profit surge is being driven specifically by AI-related demand?
So it's actually a bit indirect. Samsung delivered a blockbuster quarter, mostly because this extraordinary demand for memory chips in AI data centers is creating a shortage for conventional memory chips. And Samsung, as the world's largest maker of memory chips, is just exposed. Has a great deal is exposed in that arena. So chips for personal computers, mobile phones, all of these things saw a huge surge in prices as chip makers devoted more of their resources towards high-end memory. I've lived through many ups and downs of the memory cycle, and my knee-jerk reaction is, well, when is the down cycle going to happen next? Because in the past, every supply shortage was followed by this huge ramp up in capacity, followed by a supply glut. So the question is it different this time? Is this AI boom really going to create a ongoing cycle and break the memory cycle altogether?
Yeah, a healthy dose of journalism, cynicism, or at least skepticism about the story. But let's go back to just what is happening right now. Samsung's got its rivals like SK Hynix, Micron. They're also benefiting from the AI boom. So where does Samsung stand in the race for these next generation chips?
Well, in high bandwidth memory, Samsung has really fallen behind, and it's in a rare position of having to catch up to its smaller rivals, SK hynix and Micron. So this year is kind of the make or break year for Samsung. Last year they submitted their cutting-edge HBM4 chips for quality testing by NVIDIA, and investors are watching to see whether Samsung can, move this huge, its massive resources to focus on catching up and closing the gap between it and SK hynix and Micron. So the race is on, and we'll just have to see what happens in the coming months.
Thank you. Bloomberg's Mayumi Nagishi walking us through what has been quite a stellar start to the year for many of these memory chip makers. All right, let's broaden the conversation out and take a look at how equity futures are trading. We're still early days, it's the first few trading days of the year, and today things are slipping a little bit. Muted activity coming through. S&P futures down 0.2%. The Nasdaq also down 0.4%. This after mild losses for the S&P yesterday, pulling back down about 0.3%. Earlier on the show, I was talking about a couple of specific sectors that Trump has been talking about yesterday, specifically targeting the housing-related companies, saying that he would move to ban institutional investors from buying single-family homes. So clearly, housing affordability is going to be a focus of this administration going into the midterms. So on the back of that, you saw the likes of Blackstone and other housing-related stocks or investors drop anything from 3 to 5%. He also spoke about defense stocks as well and said that he won't allow defense companies to issue dividends or buy back their own stock until they invest more in production and research. So a bit of a down day for the defense sector as well. But this is your picture getting into Europe. European markets also seen in the red. That's it for our show. I'm Jumana Bersachi in Dubai.